Let's get this out on social media. Get it out on Twitter. What a lot of horrible red. S&P 500 still holding up relatively. Qs are down a bit. Qs are fairly tech heavy though. This might be just kind of general tech pullback. Prague moved into the lower channel. This would be nice if it holds up on these two different channels. Could be some good potentials to make some money there. I just wonder how much participation, when the market's as red as it is, a lot of people can only stare at it for so long. Let's go ahead and bring up the Russell 2000. There's some things I wanted to check on the Russell, mainly on the options chain. Yeah, see, the Russell is just like the Qs and the SPY, so that might be a way to take a little bit of an advantage of it. And it looks like they are $2 increments till you get further down. Wait a minute. Yeah, that's kind of interesting looking at the Russell. Some of the options contracts are $2 separated, or strike prices are $2 separated, then you get up into $1. Almost wonder if the times are a little bit late for some people. Of course, that hurts because that's it's all dependent upon what time I get off work is when I start streaming. But yeah, so the IWM follows that the 3 times a week on their options chain. So I almost wonder on some of their bull puts. Hey Trapper, how's it going, man? So Trapper, was that today that you'd picked up? You said you sold some cash puts. There's selling cash puts is definitely a viable way of making money. It just, for me, it's to be able to lock up, whatever strike price you're looking at multiplied by 100. what, like I was saying, if you're doing the $20 cash puts, and that's locking up $2,000 all in one position, and there are potentials to take that money and spread it out amongst other between multiple stocks. If you had three or four stocks that you wanted to get into bull puts on, if they were $100 contracts, you could enter in, even if you had two different positions, throwing $1,000 in each, 10 contracts each, and that you could build in a little bit of flexibility there. But certainly buying cash puts definitely is definitely a viable way of making money. So you got to put at the $22. So you put up $2,200 collateral on that. Let's jump over. And so, did you pick those up for this week? Because running a faster rotation on the wheel, uh, anytime I run the wheel, I like to turn it around as fast as possible. So I always go for the nearest strike. So, like, if you put up 2,200, and looking at it for this week, $140 collateral collected. That's fairly nice. The thing is, if it dips down at the end of the week, and you get assigned those 100 shares, you can turn around and then with that extra 100 shares, you can sell a covered call up above it, and keep working back and forth. Especially Oh, okay. Hey, well, thanks for popping in the chat here for a bit. I know on a 3 red weeks in a row, I know a lot of people aren't going to want to stare at the market too long. It's painful. I mean, a lot of us that have heavy positions in AMC, yeah, we're down pretty big, but the fact is they haven't covered yet. So until you close your position, they're all just numbers on the screen. But yeah, we can. I'm going to try and be on tomorrow. Yeah, I'm gonna, if you can't stay in this evening or anything, I'm gonna try to get in at lunchtime and get like a midday update, and can go over some stuff there. If, of course, if you're interested. Yeah, but at close, that 140 is not that bad. That's a pretty good premium to collect. Especially if you go from 22 to 25. Keep bouncing it, if we end up range bound. Question is, where is AMC going to catch support from? Just keep seeing push down and channel, push down and channel. Might as well get rid of these, because those aren't going to be around anytime soon. Driving screen protector cracked, so it's typing crazy. But as long as your screen didn't crack, that means screen protector did its job, and that's certainly worth the money of getting a good high quality screen protector. is waiting to see if we can catch some kind of reversal. Looking at the $20 level, everyone's worried about that $20 level because they're like, oh, we hit 20 and the next stop is 12. Next stop is 12. Next stop is 10. Next stop is 8. Dip buys like that are just gonna. They can't hold it down. Can't hold it down forever, and it's the full market. Granted, though, the SPY is catching some pressure, but nowhere near like AMC, GME are looking at. Checking the whole market. Yeah, it does get scary. A lot lately. I have just been not really paying too much, unless I had capital to put into AMC. After talking to your mic in order. Oh, okay, talk to text, yeah. Oh, then you can certainly get some goofy things coming up in chat. But yeah, I've actually been so on my watch list. They've got it to where you can build out different watch lists however you want, and one of the watch lists that I utilize quite a bit in options is I've got a list, and the only positions that go in there have weekly options and no dividends, because the trouble with selling options is the risk of early assignment in order for people trying to capture dividends. So I've got not a complete list, but a scaled down list of some of my favorite positions that they have, options ending every Friday. And the whole thing behind them is there are no dividends, which means people can't run to try and, to steal dividends from me. So that was kind of on this one. I wanted to talk more about, finding ways to do your homework to make your trades more efficient. And even looking at that, the list that I run off of, it's 16 different companies, different ranges, all the way from $5 stocks all the way up to $200 stocks. Well, since it pushed back, looks like my highest now is $175. So, yeah, a lot of these positions have been taking hits lately. But some of them have, even though 15 out of 16 of them are red today, they still have potential for playing the low side, and it looks like a lot of them have picked up and stabilized on a channel. They have the initial push down at the open of the market to respond to everything that's going on in the market. That initial red push is across the board, but once they settle down for the day, some of them trade sideways, some pick up a little bit of momentum. So just going through, and of course everybody's all about AMC and GME and SHEEB. Everyone has those those rip to the moon, make a ton of money stocks. And yeah, it's cool to focus on those, but when you look at the rest of the market and how many thousands of different positions there are, between stocks, ETFs, there's just tons you can trade. And so, with situation we've been seeing where AMC and GME have just been getting, driven into the ground, it's nice to be able to take some of those other positions, look at those, and, find other places to start make a little cash on the side. And if you're the type who builds up a reserve and has has cash standing by for when a mega sale pops out, it's nice to be able to, skim a couple $100 off that and throw it into some other positions to see if you can start generating a little bit more capital. So the one on the list that is green today was actually ChargePoint. Now they have been going through a push down just like the rest of the market, but it's almost looking like it wants to hold above this 1950. It came down. It's had a triple test. Today closed out with actually it's been a couple days. Yes, there's been buying pressure stepping in on it. So just kind of seeing, what was going on with ChargePoint. If they're on a little bit of an upward run, anytime you get a stock that starts trending upward, that's when your vertical on puts can really come in and pick you up a little bit of cash here and there. And because it's only a $20 stock, if you look, the difference on the share prices is only 50 cents. So that means any contract you enter is only going to be a $50 contract. So basically this turns, if you're looking at the same value on AMC, all the contracts are $100. Well, here, you're getting two contracts for the price of one. Hey, Wrestler, how's it going, man? So on ChargePoint, ChargePoint's on a little bit of an upward trend. So if you had, if you're the type who's always got to be looking for some kind of trade, which that's me. I always like to try and find places to make money. Even dropping down and getting below that $20 mark, the 1950s to 20s. So you'd be putting up for each contract $50 collateral, and you'd still be collecting $13 premium. And all the stock would have to do at that point is hold above the $20 mark. Well, if we look at it, it has dipped down. So at this point, you'd have to look at, is it worth risking? Wrestler, yeah. Is it worth risking that low end, or would you maybe push it down one more level, knowing that 1950 could be a little bit of a risk? Pop back over. So look at your 19 and 1950s. Now see here, you're only going to be making $6 a contract. So as everything, you got to look at the risk versus reward. And if you work to clear yourself out of there, you would most likely be getting fills at the $5 per contract, because I believe this one is cheap to the point where right now the middle is at 6. This 3 on the bid, I don't think that would actually be honored. Most brokerages, when you're dealing with prices that low, you got to go off of $5 increments when you're that low on the stock. So this would actually be a 5 and a 5. So you'd be looking at your $5 contract and get filled almost instantly on that. And since you're only putting up $50, your maximum profit is 10% of your risk, or 10% of your collateral. So Wrestler, how did you end up doing this day? So I'm going to jump over on, I'm going to actually pull up some of the higher valued ones on there just so we can see how some of them are holding up. And all the ones I'm going to be going over here are stocks that have weekly options and they do not have dividends. So let's have a look in here. So we're just looking at ChargePoint, which was the green of the day. And one that I was actually taking a look at earlier was AMD. So the same thing, AMD has been suffering. They suffered that same push down. Red as fuck, yeah. That's yeah. Like I was saying, wrestler. I looking at my portfolio, I had 30% green only. Well, that's because some of the positions that I take, I've got some like Goldfield. It's a African gold mining company. Bristol Myers Squibb, Iron Mountain, Consolidated Edison, Medical Property Trust, Stag Realty, Horizon. It looks like currently a lot. Yeah, silence. It looks like a lot of real estate type companies they're faring a little bit better than the market right now. But that was always I'd heard that even before I got in the stock market. That was, if you're looking for a good investment, invest in land. So yeah, if you're looking into any company or any stock that handles land, and there are quite a few of them out there, that the initial buildup of my portfolio was based around financial and real estate companies, and that was a majority of what I initially started with. I scaled them back to get a better get a more balanced portfolio. But I'm gonna break from form right here, and I'm gonna pull one up. This one does have a dividend. It has a dividend, but it is an ETF, and this is actually part of the core of my investment, my regular portfolio. And as you can see, over the same period, we see the SPY. Don't spam the shit. We see so many positions just getting pushed down, and people losing huge amounts of money. Well, Vanguard Real Estate. This is so in building my portfolio, the core of it, I have the SPY, the Qs, for market growth and for mainly the two largest indices. But I also run Vanguard here as a real estate kind of a stopgap to fight against what we're seeing now, when the rest of the market goes into a pullback. This is one of those companies that continues to make me money even while this is going on. Having some kind of a REIT ETF, anything dealing with real estate, any of your ETFs like that, having part of your position put into this, gives you a little bit of protection against a market pullback. Wrestler just doing my job. So yeah, this is one of those positions that even with the rest of the market pulling back, and with so much red in the market, and even if we zoom out further, aside, you can see when the market started to get hit really hard. But as you can see, it fought back across or against it the whole way, dipped down 104.95, and since then has been for the most part on an upward trend. So if you're looking to have part of your portfolio that you can look at and see green and be like, okay, yeah, the world is not ending. Something like this is certainly a good position to hold. And the fourth part of that, because as I said, it was the four key positions, as far as having a size based, a value based, a REIT, and the other one is having a bond position. This actually turned into more of a how to protect your portfolio. And this is actually Well, bonds are down right now. Here's one of the other positions I hold. Bonds are down. The thing on the bonds, though, I believe this one does give a monthly dividend. So that's kind of a way to shore up your account, kind of spread out your risk among different areas, and hitting multiple areas on ETFs that can give you a little bit of protection. I'm trying to see. I thought that it was AMD that I was looking at earlier. I was looking to see if I can get into any good day trades or swing trades. But it's just with how the market is right now, it just feels like buying puts on positions. If you have spare cash laying around that you could use. Just that buying puts right now might be safer place, or if you're doing bear call spreads, because it is a bearish market right now. So some of your call spreads might actually end up panning out better right now just because of how they're driving the market down. And certainly, if I was going to be playing any kind of bearish position, it would not be on AMC. I do not run anything bearish against AMC. Everything the whole thing on AMC is play it bullish and try to increase your position on it. Granted, you can increase your position playing bearish, but that kind of goes against what we're trying to do in the community. Let me kind of... So we're going to go... So let's jump in one of these others. And let me try and get these built right. I'm doing things on multiple screens at once. So MU was not the one I was looking for. This is not the stock I'm looking for. Yeah, we'll use this one. This again is a weekly dividend stock that does not have a dividend to it. So again, we're going to go in on the vertical. We're going to go on the call side of the house. And do I have to flip this in order? Just want to make sure I get these in the right order. Oh, no, wrong direction. We want to sell. There we go. So as you can see, this is on Neo right here. Oh, hang on, I want to have a look and see how okay, that's how your screen looks. So with a bear call spread, again, it's a strategy where you want the price to go down, and as you can see, you're risking a lot for not too much reward. Oh, let's get on single contract just to make those numbers better. So as you can see, your risk on this, it's a $100 stock or $100 collateral secured up, and you're risking 86 for a $14 profit. So on positions like this, your reward is not going to be, you're not looking to make huge gains. Anytime you run a spread, you know what your maximum loss and your maximum gain are already going to be. And you're never going to see, huge gains on individual contracts. So, most of it comes down to just nickel and diming and just collecting that little bit of cash just to increase your stockpile, increase your powder, waiting for when dips come in, and you can buy larger, have larger orders going through, or like Trapper did, where he ended up getting the selling the cash secured put. Well, you've got to have capital in order to do that, and positions like this are a way that you can earn a little bit of capital here and there. So yeah, that would be selling. You're selling a call spread as opposed to buying it, because when you buy the call spread, now let's get back over to the graph, you want the stock price to go up. And when you're doing a call spread, anytime you're buying, that's when you've got to that's when you put up the full amount, and you're waiting, and theta decay works against you. Anytime you're buying, you have theta to worry about. That's part of why I like doing selling when it comes to options, because theta's your friend at that point. And as you can see, Neo's not been having a fun time. Wait a minute, I'm still. Yeah, let me get over to another stock. There we go. Neo was acting weird there. There we go. All right, Trapper. Good luck. Hopefully screen protectors aren't that spendy. And I'm actually gonna to wrap up this stream. With how red the market was, I know people don't want to linger on how bad it was, but I figured just pop in here and let people know that of course there are other plays, and if a continuation of options outside of AMC is something you're looking at, just a little bit of homework, figure out what kind of options plays you're willing to get into, and looking for the safest and most economical ones to pull or to play on. But yeah, I'm going to go ahead and wrap us up for the evening, and I will see everyone in the Claybo stream tomorrow morning, or at least I'll be giving a listen to the channel, and let's all get some of that good vibes out in the air, and see if we can get some green for AMC tomorrow and bounce off this bottom. Hey, no problem, Trapper. We're all one community. We're all out here to make money. We're all out here to get fairness in the market, and market transparency, and get a little bit of knowledge along the way. So I'll talk to you tomorrow, brother. And I don't know if Wrestler's still in here, but I want to thank both of y'all for stopping by. Any audio listeners who popped in, and if you can help get the word out for the channel on social media, Facebook, Twitter, share the channel, and hopefully we can get this community building, and we can all make money together. So have a wonderful evening, and I'll talk to y'all tomorrow.